Hey everyone, welcome to another episode of Investing Kev. It's been a few weeks, but I am back, and today I want to talk to you about Teladoc's fourth quarter quarterly report and their full year results. Teladoc, ticker TDOC, was the second ever stock breakdown and analysis video I ever did way back in June. Most of the information still holds true to this day. If you want to check out that episode, it is episode 4. This channel is growing, so if you like my content, please give this video a thumbs up, subscribe, and let me know in the comments what you think. For full disclosure, I own shares of Teladoc. Alright everyone, let's get started. Looking in the fourth quarter, they had revenues of $554 million. This is up from $383 million in fourth quarter of 2020, which is a 45% year-over-year growth. Their adjusted EBITDA in the fourth quarter of 2021 is at $77.1 million. This is up 53% year-over-year compared to last year, which is at $50.4 million. Looking at their access fee revenues, they had $470 million in fourth quarter of 2021. Last year, they were at $312 million. This is a 51% year-over-year increase. Looking at their visit fee revenues, they were at $69 million in the fourth quarter of 2021. This is a 21% year-over-year growth compared to last year at $57 million. And one thing I like to see is their expansion domestically and internationally. In the fourth quarter, they had $483 million just generated from the US alone. This is a 45% increase compared to last year at $332 million. And looking at their international revenues, they went from $51 million to $71 million. To see 40% or more growth in a single year, both domestically and internationally, is awesome. And looking at their quarterly trends, they currently have 53.6 million US paid members. Their chronic care enrollment is currently at 729,000 people. And their average US revenue per member is currently at $2.49 per member. In the first quarter of 2021, they're at $2.09. In the second quarter, they're at $2.31. In the third quarter, they're at $2.40, and they are currently at $2.49. This is great to see because in the fourth quarter of 2020, they're at $1.63. This is a 52% increase in a single year. In fiscal year 2021, they had total revenues of $2.03 billion US dollars. Their fiscal year 2022 guidance has them at $2.55 to $2.65 billion US dollars. This would be an increase of 25 to 31% year-over-year growth. Their adjusted EBITDA in 2021 was $267.8 million US dollars, and their projections for 2022 is 330 to 335 million US dollars. This would be a 23 to 25% year-over-year growth. Their net loss per share was $2.73. In 2022, they're expecting losses of $1.60 to $1.40 per share. Analysts are saying Teladoc will turn a profit sometime in 2024 or possibly 2025, so we're still a few years out. For the full year 2022, they expect total US paid memberships to be from 54 to 56 million members. There are a few things about the future of Teladoc that I like. The first one is that they continue to offer services that continue to push the industry forward, putting them at the forefront. Just a few days ago, they launched Chronic Care Complete, which is the first unified chronic condition management experience. This is to help individuals improve their health outcomes while living with multiple chronic conditions. The solution provides members with a unified, comprehensive experience that leverages connected health monitoring devices, access to health coaches, and support from physicians and mental health specialists when needed. Currently, more than 1 in 3 adults live with multiple chronic conditions, with those conditions comprising 90% of all healthcare spending. Chronic Care Complete is designed to help people living with chronic conditions improve their health outcomes by providing personalized, high-quality support. This helps address prediabetes, diabetes, hypertension, weight management, and mental health concerns. Members will receive easy-to-use health monitoring devices such as connected glucometers and blood pressure cuffs, work with certified chronic care professionals, personal coach to set and achieve health goals, consult licensed therapists for mental health support, and access physicians who can review and adjust medications, order labs, and provide care when needed. And look at this article from Bloomberg back in January. The telemedicine telehealth market is to hit $431.8 billion globally by 2030. This is a 26% compound annual growth rate. As per the report, the global telemedicine telehealth industry was pegged at $40.2 billion in 2020. It is estimated to generate $431.8 billion by 2030. The telepsychiatry segment is to portray the highest compound annual growth rate through 2030. By application, the telepsychiatry segment would register the highest compound annual growth rate of 27.9% during the forecast period. This is due to increase in the patient pool of anxiety, stress, and mental illness. However, the teledermatology segment held the largest share of the global telemedicine market in 2020. This accounted for nearly 1/3 of the market, owing to a rise in the incidence of skin diseases across the globe. North America dominated the market in terms of revenue. By region, the global telemedicine market across North America held the largest share in 2020. This contributed to nearly half of the market due to the rise in government support and higher infrastructural capability of telehealth services. However, when we look at the future, the market across Asia Pacific is anticipated to portray the highest compound annual growth rate of 29% during the forecast period. This is owing to a rise in investment and campaigning about telemedicine services in developing countries. And looking at this article that just came out a few days ago, the worldwide mental health apps industry is expected to reach $17.5 billion by 2030. This is a compound annual growth rate of 16.5% from 2022 to 2030. Telemedicine is massive, and I'm super excited about Teladoc. Looking at Teladoc stock price, the stock has been destroyed within the past year. In the past year, it's dropped $190.70, which is a 74.5% drop. Back in June of last year, I bought the stock at $152. Ever since June 1st, I've been dollar cost averaging through the highs and lows. Out of all the stocks that I own, this is my biggest loser. I believe in the stock long term, and the stock is a minor position in my portfolio. I'm excited to dollar cost average in at these prices. I don't have a crystal ball, so the stock can go down even further, but I'm still going to average down. For me personally, as long as I can average down my cost basis, I do believe the stock will reward me years down the road. I believe my patience will pay off. That's all I have to share with all of you today. If you like this video, please give me a thumbs up, subscribe, and let me know in the comments what you think. Are you a Teladoc shareholder? Do you believe in its future? Did you sell out? Are you going to open a position? Let me know. Thank you everyone for tuning in once again. As always, stay safe, and I will see you all next time.